Warning. This video and all other videos on this channel are for entertainment purposes only. The content of this video and all other videos on this channel are the opinions of the creator only and do not constitute legal, trading, investment, or financial advice of any kind. Investing carries a high level of risk and the majority of retail clients lose money. Do not invest any capital unless you understand the risks and you are prepared to lose it all. Alright, hello and welcome to Camel Finance. I'm your boy Camel, and today I got a few tabs to show you as always. Right, we're going to look at some charts, but I wanted to talk about this, diminishing returns and this whole idea of the 5.3 theory. It's not really a theory, it's a hypothesis, I guess. But the point is, in my comment section, I see something come up repeatedly, almost every day, and that is that a lot of people think that diminishing returns is going to play out and that the 5.3 idea is going to come to fruition. So the reason I want to talk about this is because I believe the people that are using quote-unquote logic to illustrate this point or to support this idea are actually using faulty logic. And I wanted to just kind of think out loud here. I'm by no means claiming to be correct. Like I said, I'm just going to think out loud. I'm just going to point at a few things and try to get a discussion going, right? Because to me, the whole idea of diminishing returns 5.3 is kind of silly. And most of the idea is predicated on looking left and saying, well, that's what Bitcoin always does. But to say that is to simply ignore that this cycle is different for a number of reasons. So I'm going to just kind of think out loud, like I said. I want to start with a BLX chart here. And in case anyone's not familiar with the diminishing returns idea or the 5.3 rule, all it really says is that if we measure the gains for this cycle, okay, this first pump, we had 98,000%. If we then measure from this one to this top, okay, we had 63,000%. If we measure from here to here, we had something like 11,000%. And if we measure from here to here, we had something approximating 2,000%. And so the idea behind this whole diminishing returns thing is that this pump was the biggest, the next pump was smaller than the first one, the next pump was smaller than the one before, and the next one is smaller than the one before. And thus, it's reasonable to assume that this next pump is going to be less than the last bull cycle. Meaning, if this one is 2,200%, these are really approximate numbers, it's just for illustrative purposes, but that means that we could expect a pump less than the prior pump, okay? It's unreasonable, therefore, to assume that we could hit another 2,000% plus return here. So that's the idea for diminishing returns, and it sort of makes sense from a market cap perspective, okay? Down here, if we've got a market cap of, 1 billion, arbitrary number I'm just picking, it's easier to see 100x on a 1 billion market cap than it is at today, where we've got a north of 1 trillion market cap. Obviously 100x, are we reasonable to assume we're going to get to 100 trillion in a single pump? Obviously not, okay? Obviously that makes sense from a market cap perspective. The bigger the market cap, the smaller the expected pump should be. I have no problem with that whatsoever. And of course, the larger the market cap, the more capital it takes to move that market cap significantly higher. For the 5.3 rule, in case you're unfamiliar with it, it basically says that if we measure the pumps, okay, and then compare the size of the first one to this one, and then compare the size of that one to the next one, so on and so forth, what you find is each pump that occurs is approximately 5.3 times smaller than the one before it. And thus, if we extrapolate this out all the way across, it tells us that we can only really expect a top of around 85k for this cycle. Okay, so that's the 5.3 rule. It says that if we're going to keep looking left and extrapolating out, if these pumps keep getting smaller by an order of about 5.3 times, then this current top should be somewhere in the neighborhood of 85k, and thus it's unreasonable to expect Bitcoin to do any numbers beyond around $85,000 for this cycle. So that's the idea of diminishing returns. That's the idea of this 5.3 theory. But the reason I wanted to talk about this today is because most people seem to be backing this up with a simple sentence, and that is, well, look left, Camel, that's what it's always done before, okay? But I have a number of problems with this for a number of reasons. First of all, if we're going to use this idea of look left, okay, that's what it's always done before, well, that very argument would have said that we couldn't possibly make an all-time high before the halving, because in none of these prior cycles did we make an all-time high before the halving. And I remember when we were all in this neighborhood here, okay, everyone, remember, was expecting us to do normal cycle things, okay, something like this, a retest of the low, little pump into the halving, post-halving dip, and then eventually make our way up to a high, a cycle top, somewhere around October of next year, followed by a 12-month bear market decline, because, again, quote, that's what Bitcoin always does. right? When we look left, that's what we've always seen before. And that very thinking meant that many, many people did not see this move coming. They did not successfully predict the all-time high before the halving. And so this is my first issue with this idea, right? Is that I don't think it's okay to just look left and say, well, that's what it's always done, therefore it's guaranteed to happen again. It's a market, anything can happen. And yes, there's always a cyclicality to markets. Bitcoin undergoes very consistent, approximately 4-year cycles measured low to low. But again, using this argument would have said that it was impossible. It was impossible to make an all-time high before the halving, and yet there it is. The next thing I wanted to point out here is that if we assume this 5.3 theory is correct and we've got a top of somewhere around 85k, I've marked on the chart approximately 85k, and this is where a lot of the 5.3 crew, a lot of the diminishing returns crew seem to think is the maximum top for this cycle, okay? But like I was saying, I've got a number of problems with this. The first problem I have is those same people are also kind of neglecting or negating or invalidating the idea of a left translated cycle, which is fine. I'm not here to debate that today. I'm not here to talk about that today. But again, it kind of doesn't make sense, right? This is where, for me, the logic falls apart. If we're going to say that we're going to do what we've always done, which is put in a top somewhere around October of 2025, would put us somewhere in this neighborhood, right? So therefore, are we calling for a normal right translated cycle that looks something like this? When we zoom out, will this not look very, very strange? Right? And then for the next cycle, we're going to have an 85% bear market decline, wherever that number takes us to, into 2026, over 12 months, just like we've always done, right? Because that's what Bitcoin does. Followed by another one of these cycles with diminishing returns. Does that mean we do this and roll over and die? And Bitcoin's going to zero? That's the first issue I have with it. Now, we can't say for sure it's not going to roll over and die and go to zero, but this, to me, does not look right, especially when we zoom out, right? When we zoom out, it just looks like this thing is flat and there's no more gains to be made, and that's the absolute maximum price for Bitcoin. The next issue I have with this idea, right, is that everyone's quite familiar with Bitcoin undergoing a 93% bear market here. It underwent approximately 85% here. It underwent approximately 82% here. And here it underwent something like 74%, if my memory's correct, 78%. That's probably not accurate because I probably mismeasured it slightly, but you get the idea, right? Around 80 to 90% bear market declines. So if 85k is the top, okay, and we're going to have another 80%, I don't know, 85 even percent decline. Let's see, okay? So if we take the worst, first of all, 85%, that means the bear market low, if this 5.3 and diminishing returns idea is correct, will be somewhere in the neighborhood of 12k, okay? And, okay, what if we say, well, okay, maybe not 85%, maybe 80%. Well, that puts us at 17k. What if we say, well, Camel, each one of those prior bear markets is getting less and less significant in terms of drawdown. So what if we only see a 75% decline? Well, that still puts us at 21k. And even if we only saw 70%, which would be significantly less than all other bear markets, we are still looking at somewhere in the neighborhood of 25k per Bitcoin. And I know a lot of people salivate at the idea of buying 25k Bitcoin. But to be frank, you don't understand how mining works, okay? We are now post-halving. We are now post-halving. The miner floor pre-halving was somewhere in the 36k neighborhood, okay? But post-halving, we're way, way higher than this. Only the very, very, very most efficient miners can get away with being profitable at 36k at the moment, okay? The vast majority of them cannot. The vast majority of them need 50 to 60, even higher, $1,000 per Bitcoin just to be able to stay alive, okay? That's the reality of where we are at the moment. Only the very, very, very most efficient miners can get away with 36k. So if you're championing an 85k top and then a 70% bear market decline down to around 25k, well, guess what? Most of the miners are going to have to go offline. We're going to have to see massive increase in centralization of miners. And this entire chart, this entire 4-year cycle idea will look very, very, very strange, okay? It will look something like this, which barely goes up. And then we'll have this 12-month bear market decline down to, what, 20, 25k, okay? And look at this. It just doesn't fit. It just doesn't look right at all. It doesn't sit right with me. And again, we're only using the same arguments. Let's look left and extrapolate right. When, as I said, that doesn't even make sense because we saw an all-time high before the halving, right? So we know this thing can do things that it's never done before. We've literally seen that just weeks ago. For me, the way I like to look at this is we look at where the bear market lows formed relative to the prior minor floor prices. And what you'll notice is that right as we get to the bear market lows, whether it's here, whether it's here, whether it's here, okay, these lows tend to form ever so slightly below the average price to mine one Bitcoin. This is normal and to be expected that we dip below that. We do squeeze out a bunch of the miners. We see the miner capitulation into the bear market lows. And then the network functions as a self-healing, self-repairing network. The over-leveraged miners are flushed out of the system. We do see a slight concentration in terms of the miner decentralization for a short period of time. And then we enter a new cycle. New miners come online. The more profitable the price of Bitcoin gets. And the whole thing is seen all over again. So a little bit of miner capitulation makes sense. Right? But if we've got an average price to mine a Bitcoin at the moment, somewhere in this neighborhood, somewhere right around where we're trading, right? We're already seeing this in terms of miner capitulation. I showed this yesterday. We've got huge amounts of miner capitulation because post-halving, the floor price has just doubled and only the most efficient miners can get away with these sort of 36K levels. Most of them need 50, 60, even higher $1,000 Bitcoin to break even. And that's why we're seeing this big miner capitulation at the moment. So for me, any kind of bear market low of the next cycle is highly unlikely to be below this 50 to 60K region. And that leads me into my next point for why I'm not really subscribing to this whole diminishing returns idea. If I go back through these cycles and I put a horizontal line through the all-time high, okay, what do you notice about this bear market low relative to the prior all-time high? What you'll probably notice is the bear market lows form significantly above the all-time high of the prior cycle. Okay, is this true of the next cycle? Put in an all-time high here. Where do the bear market lows form? Once again, significantly higher than the prior all-time high. Now, this was the first time we ever saw the prior all-time high not exactly hold, okay? But notice, it didn't come significantly below, right? We spent very, very little time, a quick flush, we recovered within one 60-day cycle, and the price continued to move higher. So this leads me to my second problem, right? If this 85K-ish level is the top for this cycle, okay, where are these lows going to go, right? Where are they going to go if that really is the top, 85K? Are we just going to have no drawdown? Are we going to have a 20% decline? Or like I said, are we going to be somewhere in this neighborhood? Where would the lows go? Where would the bear market lows go relative to this prior high? To me, it doesn't make sense. It doesn't make any sense whatsoever. It makes far more sense that 85K is not the top, okay? This ends up being the bear market low, and we actually see a top way, way, way higher up. That makes perfect sense to me. We see a high, okay, the bear market lows of the next cycle form way higher above the prior high. We see a high, the bear market lows form way higher up above the prior high. We see a high, the bear market lows form at least around that high, okay? And if 85K is the top, then where are these lows going to go? All the way back to the bear market lows? Is that where we're going? That doesn't make any sense. It makes far more sense that 85K is indeed not the top. What we're going to get is a big squeeze to the upside, and then the bear market lows form at least back around these prior all-time high levels. So based on all of this, I just don't believe that we've already seen the top and that what we're going to do now is draw down 85%. I think this is hope, because most people miss this entire move and they're just dreaming of being able to buy a whole Bitcoin at 20, 25, 30K, right? I really don't think you're going to get that because, like I said, the miners are going to be in serious jeopardy, okay? We can't really spend any time down sub 35 without really putting the miners in jeopardy. The other thing is, as I was saying earlier, it doesn't make sense to me to just look left and extrapolate to the right. That doesn't make any sense at all. And to me, what makes the most sense is right in here, we've got peak fear. We've got a whole heap of people saying, diminishing cycles, Bitcoin only has a maximum of another 20 or 30% upside, so I need to play a bunch of altcoins, right? And to me, if this thing moves up to 150, even 250K, and then spends some time in a bear market decline, ending somewhere around the prior all-time high level, okay, of 60, 65K, then assuming where my arbitrary squiggle has been drawn, right, which is 220-ish K, right, 220K, we have a bear market of, where does that put us? 78%. So if we reach 222K, we draw down 78%, okay, that gives us a bear market low of just under 50K. And if it's just under 50K, many of the miners are going to be in trouble, but we could get a nice slingshot and a snapback. That wouldn't be too bad. If what we see is these bear markets continue to get more and more shallow, right? If the drawdown keeps shallowing out. The last one was 77%. Is it reasonable to expect a 70% decline from wherever we end up? If so, that puts us right around 66K, okay? So we'd have to go up to 222, draw down 70%. That puts us right back around the prior all-time high level, which fixes a couple of problems. Number one, we haven't got the bear market lows forming below the prior bear market for the first time ever. Number two, we haven't got the miners blowing up, okay? Miner centralization massively. We haven't got the hash rate being handed over to just a few, and most people can't afford to mine ever again. We haven't got to put the network in jeopardy or entertain a miner death spiral. And here's the biggest part of all for me, is that the vast majority of market participants seem to have been absolutely sold on this idea that Bitcoin can't possibly go higher than 85k, which tells me the path of Max Payne is to moon this thing, because they're all in altcoins. They've all chosen altcoins because they believe that altcoins are the only way to get return. And the chances are, I think, we're going to see Bitcoin make a huge squeeze, a bear market decline that lands somewhere around this prior all-time high, if not higher, okay? That also causes Max Payne, because it locks the majority of people out of ever owning a whole Bitcoin, right? Most people aren't going to be able to acquire significant sums of Bitcoin if the bear market low is north of 60 or even 70k. And the only people that are really going to benefit from this are the people that truly understand Bitcoin, which frankly doesn't make up a great deal of the people in this space. Most people don't care about Bitcoin. They don't care about separating money from state. They don't even hold Bitcoin correctly. They've got KYC Bitcoin stored in a hot wallet, bought from Coinbase with a photograph of your driver's license and all of that stuff. How many of you actually run a full node and hold no KYC Bitcoin multi-sig cold stored? Almost none of you. Almost none of you. So you're not here for the tech. You're not here to separate money from state, right? You're here to try to make more fiat. And that's fine, because Bitcoin is many things to many people. But the reality is, only the people that do this thing properly, only the people that are here for the right reasons would actually be able to benefit from this. And then, of course, you'll get a whole heap of people exit their position on a quick pump to 85k and the first pullback, and they'll walk away from the market, assuming, that was it. And this thing's probably got another 150k to go on top of that. And of course, if it does this, like I was saying earlier, one, that looks right from a cycle perspective. We don't have to entertain the lows breaking. Two, we don't have to put the miners in jeopardy, okay? And don't underestimate the amount of money and capital and conspiracy that goes into maintaining a miner floor price. Those miners, okay, will do anything and everything it takes to protect their investment, to protect their business model, to protect Bitcoin. A lot of people seem to think that, they're just at the whim of price. They're not. They are the price. Miners are the price, okay? So, in summary, I don't think this 5.3 theory is going to continue to hold. I think we're about to smash through that. I see a lot of the people that seem to be very married to that, and that's fine, because the majority of the market needs to be wrong-footed. I also think, as I said earlier, it's a silly argument to say, well, let's just look left and extrapolate right, because as I showed you with the halving and us hitting an all-time high before the halving, okay, that clearly doesn't work, right? This cycle clearly has behaved slightly differently, if nothing else. And, like I was saying earlier, the biggest issue I have with this is if we are going to see a big drawdown, and I don't see why we wouldn't, okay, why would we not see a drawdown? This is a very volatile asset, okay? We just saw 25% in this little ABC here. It's barely noticeable when you're zoomed out on a weekly time frame on a log scale, but we know Bitcoin has big shakeouts. It's very volatile. This thing can and will have massive shakeouts, and it's a highly emotional market, and there's not much supply, and people need, frankly, shaking out and scaring out of their positions so that the bigger players like BlackRock can acquire it. So there is almost certainly going to be a very, very nasty bear market decline when eventually that bear market shows up. But to say that we're just going to go to 85k and then have some 75% decline down to 16k below these bear market lows, okay, just simply to me, it just doesn't add up. It doesn't add up. The miners aren't going to allow it. And frankly, if it were to happen, right, if the miners couldn't actually stop it and we had to spend any significant amount of time down here, well, guess what? It's probably not going to bounce back. It's probably going to die, because the network has been deliberately created so that number go up. Okay, number must go up. That's literally part of this whole thing. Okay, that's why most of us are here. And if number goes down, okay, then the network becomes in jeopardy. The thing becomes a failed experiment. So yesterday I was making the case that it's probably too late for most people to own a whole coin. And it doesn't really matter, okay? Like, that's just an ego thing, or for people that like round numbers, it doesn't matter. The only incorrect allocation to Bitcoin is 0. As long as you're off 0, as long as you continue to stack sats and stay humble, okay, then it doesn't really matter. It's all relative. If you're rich, you probably got more than one Bitcoin. And if you're not, it doesn't matter, right? Because it's not about measuring yourself against everyone else. It's about measuring yourself against 12 months ago. But I saw an awful lot of people in the comments yesterday saying, oh, well, Camel, it's going to pull back. Like, why wouldn't it go to 30k? And to that, I simply say, your homework for the weekend is to research mining, to truly understand the floor price, to truly understand how low this thing can go, and it still be reasonable to expect recovery. Because, as I was saying, if 85k is the top and we draw down to 85%, we end up below these bear market lows, Bitcoin's going to die. Okay, Bitcoin is literally going to die. The network cannot sustain that for any more than a handful of days. I've said a lot. My voice is kind of tired. Let me know what you think in the comments, okay? Because I know a whole heap of you are 100% married to this idea that 5.3 is a thing. It's not going to break. Diminishing return is going to carry on forever. The next cycle, therefore, is only going to return 50% and then roll over and die. And I mean, maybe it's true. Maybe that, it's a market. Anything can happen. We can't rule it out. But to me, it just seems like it seems way more reasonable to expect 200k plus here, followed by a decline that locks people out forever. The bear market lows form somewhere around the 60 to 75k region. And then from there, we probably get that super cycle where BlackRock in this neighborhood has acquired a 30+% share of the Bitcoin supply. And that's when they'll let the thing go to the $1 million per coin levels by the end of the decade. So I saw a lot of you speaking about that. That's all I have to say on that. Let me know in the comments. Please be respectful. I know I identify as a camel, but I do have feelings, right? If you disagree, that's fine. But don't just say you're wrong, bro, 30K next, okay? Or don't just say it's going lower. Because what am I supposed to do with that information? It's just a waste of your time. It's a waste of my time. If you disagree, if I've said something wrong, please do correct me. But don't just say it's going down, bro, right? Or 30K next, bro. Because that just, if you knew what you were talking about, you'd present a reason for that, right? You present some evidence to back up your point. So anyway, let me know what you think. Objectively speaking, we are still witnessing the highest level of fear in the crypto market since January of 2023. So take a look at that, okay? Right in time for that weekly cycle low, right in time for everyone to get destroyed, absolutely destroyed, thinking that the 5.3 rule is real. And right in time to see us hit the 6-figure Bitcoin into that extended wave 5 and possibly even a left translated cycle top. JP Morgan are out doing the same tricks, okay? Same stuff, different day. This is what they do. They come out, they FUD the price of Bitcoin, and then it comes out a week or two later that they were the biggest net buyers of Bitcoin. They've been doing this forever, for years. I can't count the amount of times I've seen this. I've made dozens of videos on my YouTube channel pointing at it and laughing at it. And here it is again. So this is a buy signal based on historical data. I'm sure they are not actually at all worried about Bitcoin. I'm sure what they're trying to do is get people to shake themselves out of their positions and allow JP Morgan to scoop it up, ready for the biggest, fastest, most explosive move that we have seen to date. Speaking of fastest, most explosive move to date, I actually forgot to mention this when I was talking about the 5.3 rule. Okay, if you go back and look at the cycles, right, if you add the halving dates in for each one of these, around 90 to 94% of the gains of the entire bull market are made after the halving in each case. Okay, so that does not mean 94% from here up. What that means is if this move so far from bottom to top is about 370-ish%, okay, then 90% of the entire move bottom to top has not even been seen yet. Obviously, we're not going to 5.5 million a coin, but based on historical data, if you're going to use this rule to say, let's look left and extrapolate right, well, this is a drop in the ocean, okay? It's absolutely meaningless. This 4x is absolutely nothing, and 90% of the gains of the entire move have not yet been made. So again, right when everyone seems super bearish, right when JP Morgan are out here fudding Bitcoin, okay, I think we're setting ourselves up here to absolutely slaughter the bears. I wanted to mention this because, of course, tomorrow is CPI. So I've got a dream setup for metals. I don't know if we're going to get it or not, but here's the dream setup. CPI comes in lower tomorrow, okay? Also, whilst we're here, I see a lot of people speculating that the CPI data has been leaked. I've seen that rumor a million times before, countless times, and I'll believe it when I see it. I don't think you should give your energy to it. I don't think you should be putting trades on, because it's very easy to manipulate the market. If you're a bigger account or you're a market maker or whatever, you control a news outlet, you can just leak the CPI data, get everyone to go in one direction, and then go back the other, right? Then do a rug pull or bait and switch, whatever you want to call it. So I know a lot of people are speculating that the CPI has been leaked and has been confirmed to be lower. For me personally, it changes nothing. I'll believe it when I see it. We'll go live tomorrow. We'll watch it. We'll get the data in real time and we'll take it from there. But here's my dream setup for the metals, right? CPI lower. The narrative in the news and the mainstream is gold and silver plunge on cold inflation data. That would be the narrative, right? Every dip has its narrative. But the daily and weekly cycle low are due at the end of this week, perhaps early next week. So is this the dream setup, right? We see the CPI lower. The news says, oh, gold and silver down 3 or 4, 5% in a single day because of the cold inflation data. But all that will be is a decline into a weekly and a daily cycle low. And then the Camel Crew will long the absolute granny out of gold, silver, and the miners, especially in the level 3 members section. And we will ride the weekly cycle, which is around 6 months, to the upside. My target will be 3K gold and $60+ silver. And the setup will look something like this, okay? Here is the current daily cycle count, 23 days, okay? So somewhere between 22 and 28 would be bang average. I see no clear sign of a daily cycle low anywhere in this neighborhood. I see no clear sign. I do see some confusion. I do see a very messy chart. In fact, let's clean up this chart a little bit. I do see the potential to see a rollover here, okay? Like I said, we get lower CPI. The market attributes this to, well, inflation's going down, so why do we need gold, right? Why do we need silver? But all that will be is a decline into a perfect something akin to, I don't know, day 26, 27, 28, whatever, daily cycle low, then we get that V reversal confirmed with the trend line break, and Camel Crew gets long something in here, and then we've got a full weekly cycle comprised of 3, 4, even 5 daily cycles to the upside. I'm going to be aiming for something like this to come out of here, okay? Maybe even we're slightly ahead of schedule. In fact, maybe we're more like this, Okay, this is what I'm wondering. Daily cycle low, decline and plunge, breakout, and off we go to 3K by the end of the year over the next weekly cycle. So that's kind of what I'm hoping to see. Whether we get it or not remains to be seen. Like I said in the tweet yesterday, I would consider this my dream setup. But what I know objectively speaking is trading is about having the discipline to stick to a system. I see no clear sign of a daily cycle low. I see no clear weekly cycle low when I go on the weekly time frame. I see a clear weekly cycle low here. I see a clear weekly cycle low here. Is that a week 16? It'd be very early if it is. And that's why at the moment, I still favor the idea that we've possibly got one quick snap down. Then we can say, there it is. Okay, there's a clearly identifiable weekly swing low on the weekly time frame, and that for me would be the dream setup. So keeping a close eye on that. If you're a level 3 member, of course, look out for the updates. Of course, we've got an invalidation as well. In case that setup doesn't play out, then we'll know what we'll do, assuming the weekly cycle low is in early. Bitcoin doing Bitcoin things. So is it back above this trend line just yet? If I zoom in, maybe, right? Fighting for it. Can it recover the second angle? Can it break out of the downward slope in red and see Camel get long here? And of course, I'll notify the level 3 members in real time, including the stop loss level. And then can CPI ignite something like this out of here? Can we destroy diminishing returns? Can we break the 5.3 rule? Can we get the people that were sidelined the whole way through, got in at the top, got wrecked, wrote this whole idea off to finally be forced to chase this thing higher? Can this thing end up going way, way, way higher than even I've got it marked here? There's a lot of questions, right? A lot of ifs, buts, and maybes in here. As ever, we'll keep taking it one day at a time. We'll wait until we've seen the CPI data. The crypto-related stocks still holding up very well. They don't seem to believe that some kind of big plunge is coming next. So that's happy days there. We will, of course, also be looking for the yields to come off, assuming we get that holder CPI print and the 2-year yield continue to call the Fed bluff and tell us that rate cuts are coming sooner rather than later. So that's going to be super interesting. And the stock market still relentlessly melting up. So long and strong there. What else is there to say? Apart from expect some games, expect some volatility, expect some chop around CPI as always. But overall, I think things are going in the right direction. We just need Bitcoin to confirm a breakout, confirm a weekly cycle low, get a long on, and then it should be time. It should be time. If it's going to happen, it really ought to happen now.
Let's rationalize rapid shoplifting, make skin color a perk. Blocking all streets for climate change, people can't get to work. Endorse mostly peaceful protests, expecting shops to stay. Won't let you cry about the prices when they eventually move away. All the banks are safe and sound, nothing will go wrong. Jobs gotta looking mighty fine, economy holding strong.